What is going on, everybody? It is Ahmed, and I am back today with yet another video for you all. Guys, we need to talk about the overall market. Unfortunately, the gains from yesterday were just completely wiped out after the CPI inflation data was announced and released this morning. Now remember, I always like to preface by saying that I'm not a financial advisor, but rather, I always try to put you guys on the plays that I'm in. And we're going to go ahead and dive in and talk about inflation. It's now up at the highest rate since 1982. Absolutely ridiculous. Over the last 40 years, inflation has made its way and climbed back up to the highest rates since then. So let's go ahead and dive in. But before I do so, folks, you guys can see here that I have a link in the description below for Moomoo. So Moomoo offers you 5 free stocks. Free money is free money. The thing you got to think about is not only is cryptocurrency down, but the overall global stock market is down. The S&P is down 2.5% on the day. Meaning, what you should be taking advantage of is maybe getting stocks if you'd like, especially if they're free, because if they bounce back up, then they're going to be valued at a higher rate. So get your 5 free stocks and a share of NEO when you deposit money into your Moomoo trading account. Up to $17,500 literally could be yours for free, so take advantage. The market. It hurts to see all the gains basically wiped from yesterday. After the good news that Biden came out and said, here is the executive order that the administration and himself, what they came up with. What we could see here, Bitcoin down 7.1%, Ethereum down 5.66%. It's sad to see our favorite, Shiba Inu, down 6.22%. And our weekly isn't looking much better, down double digits across basically our favorite crypto assets. Never a dull moment in crypto, right? Well, here it is. The US inflation rate climbs again to 7.9% CPI shows, and the Ukraine war threatens more pain for consumers. Inflation has surged to the highest rate since 1982, and there's little relief in sight. Oil prices, gas prices are going through the roof. Sanctions are being imposed on Russia. We don't want to import any more gas from them for obvious reasons. But what's happening to consumers and what's going on right now is the markets are hurting significantly. People are liquidating their assets. They're leaving more speculative plays. So if we go from the stocks down to speculative cryptocurrencies, based off of what you're invested in, you're hit harder the more speculative you go down the totem pole. The numbers, the rate of inflation, the rate of US inflation rose again to 7.9%. The market kind of was anticipating it because I didn't see such a huge drop, but still, it just keeps going up, a 40-year high, and Americans could face even more pain because of the Russian war on Ukraine. The consumer price index rose 0.8% in the month, spurred by the higher cost of gasoline, food, and housing, the government said Thursday. The increase surpassed Wall Street's forecast of 0.7% gain. So consumer price index is going up at a higher rate than expected. The surge in the cost of living in the past 12 months is the biggest since January 1982. Guys, the economy is hurting. The economy is truly hurting. And this makes it you have to look at it from a macro picture. Because the fact is, those of us that are only mainly invested in cryptocurrency, like myself, heavily invested in crypto, I should say, not only, it brings up a really good point. And that is, we have to look at things from a global perspective. Because do I believe that cryptocurrency is a potential hedge against inflation? Absolutely. But if, the consumer price index rises, if overall prices of everyday goods rises, the value of the dollar keeps losing, right? Keeps going down because inflation is going up. It doesn't make sense to me that markets like stocks and crypto fall significantly upon release of this kind of data. So long term, I do think most of these markets are going to do well, but people could be liquidating for whatever reason. Some individuals probably watching this video had to liquidate because of the fact that everyday goods like gas, food, and everything else is significantly going up. They need somehow, some way to supplement their income. They might need to liquidate some of their assets so they can continue to, provide for themselves and their families. So the market isn't looking so hot, but again, I think it still is presenting opportunities because inflation can't continue going up forever, right? The consumer price index can't rise forever. Oil prices and gas prices can't rise forever. War, conflicts overseas cannot continue forever. And that's the one thing that investors need to understand. Find whatever it is that you're looking to start investing into. Dollar cost average your way in. We don't know. I said it won't last forever, but we don't know how long it will last. With that being said, you make the decision on when you want to make your entry points for the certain assets in the market. I'm eyeing Bitcoin. Obviously, we found support. So what I usually do, again, I'm going to make it as simple as possible using the mother Bitcoin of all, right? So obviously, Bitcoin has bottomed at 37.3. Well, actually, on the 23rd of February, it looks like it came down to 34,700, say. So if we look at the 1 year chart of Bitcoin, or actually, yeah, the 1 year chart, we could see Bitcoin peaked right around $67,000, $68,000. It's bottomed out over the last year, right around, again, maybe we'll say $28,000, $29,000. In anticipation of it potentially going down to what it was in the summer of 2021, you can dollar cost average. So say you have, I don't know, $1,000 to your name and you want to invest it into Bitcoin. Never financial advice, just putting you guys on the plays that I'm in, always. What I would personally do is divide that money into thirds. $333, another sum of $333, and a last sum of $333. Now, a day like today, Bitcoin is down 7%, wiping yesterday's gains out completely. My first $333, I would probably put into Bitcoin now, because right now we're kind of trading at a point of consolidation. Bitcoin has been holding strong between 37 and 40,000. So there's my first entry. If Bitcoin breaks support, falls below, and goes down to maybe say 34 or 33,000, well, guess what? I'm putting my second $333 into the market on BTC. And last but not least, say the market keeps pulling back, right? It keeps pulling back and drops down to below 30,000 at a intra-year low, right? So back in July, when it got to about 29,000, 28,000 during that flash crash, well, guess what? I'm putting my final $333 and I'm going to let the rest ride. I'm going to see where this goes and I'm going to see what happens with the markets. But that is, again, just a strategy that I like doing. And again, the easy name for it is dollar cost averaging, DCA. And it means just that. Entering into the market, putting in your money instead of a full entry at a single point, it's putting money in over time. So again, stomach the volatility, folks. I mean, that's really the only option I personally have, right? I'm not going to sell my assets for a loss because right now, ETH from its all-time high, sheesh, we're down significantly. And not only are the big tokens down, obviously, if the big tokens take a hit, what happens to the micro tokens? Those are more speculative. People are more worried. People have more fear when it comes to that, a lot more doubt, and we see those get hit even harder. But again, guys, I do appreciate your support. Thank you for continuously coming back during green and red market days. Make sure, as always, you smash that like button. Consider subscribing. Check out the link in the description below for Mumu and take advantage of free money. That's all I had for you guys today. I'll be back later. And until next time, everybody, keep investing.